Hello, this is Dale from Loan Cabin with Jack, an underwriter, a non-QM underwriter. We're here to talk to self-employed borrowers out here, prospective self-employed home buyers, current self-employed home buyers, and it's a great market right now. And what I want to talk to you about is the bank statement program. Like many self-employed people, there's a lot of you out there utilizing the tax code effectively that helps you when it comes to paying your taxes or not paying your taxes, but it hurts you when you're qualifying for a loan. Well, we have an awesome program here that allows you to leverage the cash flow from your business, whether it's your business bank account or your personal bank account, and use that as a qualifying income to purchase or refinance your house. Jack, can you tell us a little bit about what you're seeing from all the loans you're underwriting on the self-employed front and how big of a market this is and underutilized in some perspective?
Sure, just to give you an idea, all the loans we do, about 60% of them are made up of the bank statement program. So the largest underserved market out there right now are self-employed borrowers. So in the US alone, there's over 13 million people who are self-employed. Now, obviously the tax laws in the US allow them to take advantage and not necessarily claim all the income they have, or they have write-offs that helps them to alleviate the income that they actually claim and pay taxes on. So these programs are set up specifically for that client. The criteria to qualify for it isn't really that deep. You only have to be 2 years out from any major event, meaning a short sale, foreclosure, bankruptcy, anything along those lines. You'd have to have a verifiable housing payment history. You'd have to have some good established credit, but only a 600 credit score. And you can put as little as 15% down with a 600 score, or as little as 10% down with a 660 score. So how it kind of works is, if you're at least 25% owner of a business or you're 1099, we'll allow you to use your personal bank statements to qualify for the bank statement program. And why, people might say, well, isn't this what got us in trouble the last time? But when you look back, before they were just stated income, stated everything.
Yeah, I would say this is different. You're actually verifying cash flow here.
Yeah, so
right.
If you were to qualify somebody on a full doc basis, and you had a husband and a wife, and together, let's just say they made $8,000 a month. That's the gross, that's what you're going to qualify them on. But that $8,000 isn't what they actually take home. They may, after taxes, after 401k deductions, they may actually take home about $5,600, $5,400. That's what your actually disposable income is to pay their bills. Mm-hmm. On a bank statement loan, on a personal account, you're actually counting the cash flow that's running through their personal account. So if they have $8,000 running through their account, they have $8,000 to pay their bills. You're qualifying them at $8,000. Who actually is a better borrower? The person who has $5,600 to pay their bills, or $8,000 to pay their bills? So then you have a business bank statement program that's allowed for somebody who's 100% owner of their business. And you're actually able to use their revenues from their business to qualify. I won't get all the details, but it's
a percentage of their
revenue.
Right.
Yes. Mm-hmm.
If you're self-employed and you're using your business bank statements, at a minimum, if you're averaging $10,000 a month in deposits, they're going to take 35% off the top as expenses, correct?
Potentially 35 to 50%.
35 to 50, and verified by your CPA, and use that as a qualifying income. Go ahead.
Yeah. Mm-hmm. So the thing with these loans is you're getting really good borrowers who have money to work with. They have assets. They have great credit. They just take advantage of the tax laws. So right. When you look at the pool of borrowers who are out there, they have money that they want to buy. They don't want to rent anymore. They've been underserved for so many years. This is a great tool and platform to get them into a house.
Absolutely. Now, Jack, on that front too, it allows them to get into a bigger house too, right? What's your max loan size on these programs?
We'll go up to $3 million.
$3 million.
Right. The average borrower, just to give you an idea, when people are out there looking to buy a house, in FHA, most borrowers are coming in, they're looking to put 3.5% down. Again, I told you we go as high as 90%, meaning the borrower would only have to put 10% down. But our average borrower puts down 28% when they're buying a house under this.
And how many months reserves they have on top of that?
At least 6 months.
6 months.
Once you get into the bigger loans, then it can be 9 or 12 months when you're getting up into the multi-million-dollar, range. But most of those, borrowers, they have the assets to do such.
So you talk, not only is this an underutilized or underserved market, how well are these loans performing?
They perform amazing.
Is there anything close to it in the market out there, how these loans are performing?
Nothing. I mean, there's the rating agencies, they analyze, how companies do. Cranes put something out, on the non-QM, type of loans. for what had been done as of March of 2018. They analyzed the marketplace at that time. I believe it was $4 billion in loans for 11,000 loans had been securitized, and of those, only 8 went to foreclosure.
That's an incredible statistic.
That's less than.
I don't think I've ever heard of anything that clean.
And that's over the period that these have been done, which is about 5 years now.
Wow.
So I mean, they're great loans.
It's a great program if you're out there and you're kind of scratching your head on how to get qualified because you're not showing enough on your tax returns. Please contact me and let me look at your bank statements and see if you can qualify. Also, like and share this on Facebook. Thank you very much. Thank you, Jack.
Of course.